All right, everybody, how you guys doing? Welcome to fxpro.com. What we're going to be talking about right now is how to go ahead and calculate pips, right? Pips, I'm not really going to go too far in depth on the definition. What matters the most is how to use it, right? So what is a pip? So a pip is a short for point in percentage. It's a very small measure of change in a currency pair in the Forex market. All right. Now, when it comes to a pip, think about how, when you're looking at dollars and cents, there's, let's say, $1.15. Well, when it comes to the Forex market, there's very small changes in the numbers. So it's not going to, the value of a currency is not going to change by cents per day. If it did, that would be insane. But it changes by smaller numbers in cents, and we call these pips. Right? So there's pipettes, there's pips, and then there's tens of pips, hundreds of pips, thousands of pips, and so on. All right, so what we're going to do is we're going to break this down completely, specifically on how to be able to calculate pips and how to be able to add and subtract pips. Okay, so let's go ahead and do that. Let's go ahead and do that. So I'm going to go ahead and erase everything I have here. And let's just say that we are talking about EUR USD, right? When it comes to EUR USD, what we're doing is we're comparing the euro against the US dollar. So let's just say that the euro, you believe that the euro is going to go up in value, right? So this would go up against the US dollar. So the US dollar would be going down in value, okay? So think about it like a seesaw, right? And the same thing is true. The same thing is true where, let's just say that the US dollar is going up in value, where the euro is going down in value, right? That's how it would work, right? So first, we're going to act as if we're going to go ahead and speak about the euro going up in value and USD going down in value, okay? So what I'm going to do is I'm going to go ahead and go straight to my phone so that we can be able to check out how everything works when it comes to MetaTrader. So what you want to do is you want to go ahead and go to MetaTrader on your phone real quick. So I'm going to go ahead and do that right now. All right, so go ahead and go to MetaTrader 4. Go to the account that you're going to be, using. All right, and we're going to talk about EUR USD. So go ahead and click where it says EUR USD. Right. Well, before then, you see how it has the section right here where it says, I don't know if I can be able to show you exactly, but either way, you can be able to see where it says 1.11576. Right. You see that right there, and mind you, it may be on simple and maybe on advanced. So just click over to advanced. See where it says 1.11576, right, on the left side, and then 11590. So those are two different prices right there, because there's an ask price and there's a bid price. The difference in those prices is called the spread, right? And as you can see where it says spread 14, what that is showing is the spread is 1.4 pips, but we're going to talk about that. Either way, let's just say that we're looking at the left number where it says, and when it comes to the spread, that's usually what the broker charges to be able to go ahead and make a trade. 1.4 pips is absolutely nothing, okay? So when it comes to brokers charging, it's really not that much, especially HugosWay. So what we're going to do is going to write down that number. So go ahead and write down that number right now, 1.11576. All right, so let's go ahead and do that real quick together, and we're going to talk about this. All right, so 1.11576. Okay, so when it comes to the pips, right, the number that's all the way to the right, this one right here, right, it's just way too small of a number, so we don't really pay attention to it. This is what we call a pipette. So we're going to act like that does not exist, okay? Now, this number right here, this the second one to the right, this is considered as the single digit pip. So this is considered as an actual pip, okay? And it goes like this: 1, 2, 3, 4, 5, 6, 7, as you can see, 8, 9, and then it moves on to the next number, 10, right? So this is considered as the 10-digit pips, okay? So think about like in a car, how the speedometer goes 1, 2, 3, 4, 5, 6, 7, 8, 9, right? And then 10, right? Same exact thing, okay? So these are the numbers that we pay attention to the most, okay? And then from there, these numbers right here move like this: 10, 20, 30, 40, 50, 60, 70, 80, 90, and then this one is 100. So these are the 100-digit pips. 100 pips, the hundreds place, I guess you would say. So 100, 200, 300, 400, 500, 600, 700, and so on. All right, very, very simple. So the ones that we really pay attention to the most are these right here, okay? So from there, what we would want to do is go ahead and go back. I want you to go ahead and look at, what do you call it? I want you to go ahead and look at your MetaTrader 4 real quick, right? And I want you to see the fact that when you have clicked on advanced, you'll be able to see how it says 1.11 and then the 5.7 is big. The reason why it's big is because those are the ones that we pay attention to the most, okay? So that right there is a little breakdown of how to be able to view the pips. Now let's go ahead and calculate the difference between how to be able to calculate the difference between pips. So let's go ahead and do that real quick, okay? For EUR USD. So let's just say that you entered in on a buy, right? You entered in on a buy right here. Now I would do that right now, but the market is closed, right? So let me actually just go ahead and just show you how to enter in on a buy real quick either way. So let's go ahead and just do that real quick. But it won't be able to actually execute the trade since it's the weekend. But let's go ahead and just do that real quick. You see where it says EUR USD? The way that you can be able to execute a trade is by clicking that. You see where it says trade, and let's just say that we clicked where it says buy, right? Market's closed, so it's not going to let me do it, but that's how you buy, right? So let's say that you went ahead and bought, right? EUR USD. So you see where it says buy, right? We're going to act like we bought, right? Now let's just say that price went from let's say price went from 1.11576, and it went up, meaning that you actually got it correct, to 1.12749. Let's just say. All right, let's go ahead and calculate how many pips you just earned. The easiest way you'd be able to do that is literally by adding and subtracting, okay? The difference between these two, I guess we'll go ahead and pull out a calculator. That'll be easy. The difference would just be 1.12749 minus 1.11576. All right, so you see how it says 0.1173, 0.1173. Okay, so now if we were to take that number right there, remember the last number is the pip bet. We're not really going to pay attention to that too much, right? And then this number right here is the single digit pip, right? 10-digit pip and 100-digit pip. So how many pips did you just make? Well, you just made that there, 117 pips. And if you were to add the other one, 0.3, but we're not going to do it. So, all right, so 117 pips. All right. Very, very simple. All right, very, very simple. Okay, so that's a little breakdown of how this works. I wouldn't really get too far into it or anything like that, but just know this is very, very simple. Now let's go ahead and do the same exact thing, but let's go ahead and do this for a different pair like USD JPY. When it comes to USD JPY, it's a little different. So if anything, go ahead and take a picture of this real quick so you can be able to have this memorized and stuff like that, right? All right, cool. So let's go ahead and move on to USD JPY. It's a little different. So USD JPY. USD JPY. Okay, so let's just say that instead we're actually selling. So we actually want USD, we will actually want JPY to go up in value as USD is going down in value, right, if we were to sell. Right. So let's just say that we were to go to our phone again. Let's go ahead and do that. So, all right, so now we have our phone, and you see where it says USD JPY, where it says 110.036. You see how it's 110.036 as opposed to 1.1156, 576. So it's a little different, right? So you see how you can be able to click right here. All right, you go to where it says trade, and then you would click where it says sell by market, right? Market's closed, so I can't really do anything right now, but we're going to go ahead and just write down that number, 110.036. All right, so 110.036. Okay, so again, just like last time, the number that's all the way to the right, we're gonna act like we don't really pay attention to it. It's just too small of a number to pip at, right? So this right here is now, this number right here is the single digit pip. So let's move to 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10 place. So 10, 20, 30, 40, 50, 60, 70, 80, 90. And this one right here is the 100 digit. Okay. And these are the ones that we pay attention to. Okay. Very, very simple. Okay. So if we were to go back to our phone, we'd be able to see the fact that we see those the 0 and the 3 in big and bold, same exact thing that we were talking about from before, right? So now we want to sell, so we want the number to actually go down. Okay, so let's just say that we got in at 110.036, right, and we got out at now remember it's 110.036. So think about 110.03, $110.03. Let's just say when we go down, it's going to obviously go from 110.03, 110.02, 110.01, 110.00, and then 109.99, and so on. So let's say we got out at 109.592 or something like that. All right. So again, same exact thing. Simple math. 110.036 minus 109.592. Very simple, right? So as you can see, 0.444, right? So with that being the case, we're not going to worry about the last number. Boom. And we have these two numbers right here. So that is a difference of 44 pips. Extremely simple. Okay. So that is that. That's talking about pips. That's talking about buying and selling. I wasn't able to actually enter into my trade just now, but that's no issue. The only thing that's actually open right now is crypto, and I don't trade crypto, But just as an example, so I can be able to show you something, we're just going to enter into a trade, and then we're going to talk about lots after we enter into a trade, okay? So let's go ahead and go back to our phone, right? And again, I do not trade this. I would suggest you not to trade this at all either, right? Being the fact that you're most likely going to be watching this during the week, you're going to be able to enter into a trade through your demo account on any one of the pairs. But just for, like I said, just for this example, I'm just going to enter into this crypto because it's the weekend, okay? So I'm going to go to just something that's open on the weekends, right? And I'm going to click where it says trade so I can be able to enter into something, right? Now you see this number right here. You see, well, first at the top is where you can be able to pick your pair, right? Where it says market execution, if you were to tap on that, you'll be able to see that there's buy limit, there's sell limit, there's buy stop, and then there's sell stop, right? We'll get into what all those mean. Don't worry about that later on. Now, right there in the middle, there's going to be some number. That number is what we call the lot. Now, the lot is just the amount of money that you're going to be trading with, essentially. Not really going to go to the definition, stuff like that. What's more important is how to use it, okay? So the smallest lot size you can be able to get into is a 0.01. We're going to talk about that. And there's literally no highest lot size you can be able to get into, but most times you can be able to go from here, 0.01 lot size, you can be able to do 0.10 lot size, you could be able to do 0.4, you can be able to do 1.0 lot, you can be able to do 10 lot, you can be able to do 100 lot. Like there's you can be able to just go off the charts, okay? But for now, let's just say, and remember, crypto's a little different, right? So 0.02. 0.01, and then let's see if I want to click where it says buy market, right? So buy by market. So I just clicked on that, and then it just entered into the trade. From entering into this trade, let's just say if I wanted to get out of the trade, what I'll do is I'll go ahead and hold on to this, click where it says close, click where it says close with loss, or it's going to show you say close with profit, okay? So let's just say I close with loss right now, right? Now it's gone. See where it says history? Now I just went to history. There it is, okay? Now what I want to do is I want to go ahead and I'm going to hold on to that, click where it says trade, and I'm going to go to, let's say, a 0.10. Actually, let me go ahead and put 0.01. I'm going to buy that, and then I'm going to go to, you can be able to change it from here as well. You can be able to put it up by clicking on that right side, put it down by clicking there. You can be able to do it by ones over there as well, or you can be able to just type it in, right? So buy, right? We're going to do a standard lot, which is 1.0, buy, and then we're going to do 10 lot. All right, so you're going to see that you're most times going to start out in negative because that's the spread, okay? See where it says 0.01, 0.10, 1 lot, and then 10 lot, and then there's the 100 lot, right? So from there, you'll be able to see the fact that there's going to be increments. So there's going to be starting out at cents, starting out then it goes into tens, and then hundreds, thousands, and tens of thousands. Okay, so imagine the amount that's in your account to be able to do things. Okay, so let's just say that you wanted to go ahead and close out a portion of your trade, not the whole thing. You can be able to just hold on to it, let's say the 0.10, close, and then I want to close out of the whole thing. You can be able to just close it. Right, but let's say if I want to do portion, you see where it says the negative 0.01, you can be able to put it down, and now I want to get out of just 0.4 of the trade, let's just say, close. And then you'll be able to see 0.06, so I got out a 0.04 of it. You see where it says history, 0.04, I got out a portion of it. All right, and that's where I have that, right? So I'm just changing up the lot sizes, getting in, getting out, so you'll be able to see certain stuff. Now let's go ahead and talk about the specific lot sizes. And from there, go ahead and talk about risk management, okay? So remember, there's the 0.01, right? And when you talk about the 0.01, when this moves 10 pips, right? And we talked about what pips are, and you'll be able to see the fact that pips move pretty quickly, okay? When that moves 10 pips, it's moving $1, okay? That moves $1, okay? All right, so yeah, so 0.01, 10 pips is $1, okay? Now what we'll do is, so it's moving $1 plus or minus, all right? So that's plus or minus. All right, so now let's just say that you got in at a 0.10 lot size, and it moved 10 pips. That is moving at $10, okay? So understand that it's the same amount of pips, it's just the amount of lots that you're going to be using to be able to go ahead and make that trade. So let's say you got in at a one lot, a standard lot, 10 pips, and that is at $100, okay? 10 lot, 10 pips, and that's 1,000, and then 100 lot, 10 pips. How much do you think? $10,000, okay? Very, very simple, right? What I find interesting is the fact that this right here has never changed, but this changes over time. Just know that it's the growth over time that's going to get you to the higher money, okay? So just focus on, growing your account slowly but surely. Even if you're starting out with $500 in your account, you're still going to be able to do well. It's just going to take some time to get to the higher lot sizes and beyond, to be able to get to the big money, right? You just got to compound your money over time. Just focus on growing on an everyday basis. Don't go too fast. Don't worry about that, because that's what's going to mess you up. Focusing, like getting the book Think and Grow Rich and just reading it, I promise you, is going to be do wonders for you. Okay, so this is a little bit about pips. Now what we're going to talk about is risk management. Okay, so go ahead and take a picture of that real quick so you can be able to have that. All right, let's talk about risk management real quick. All right, so what we follow is a 2% risk management for our organization. Okay, and I would suggest that you guys follow this the same. There's a little bit of extra details previous to this, but we're going to go a little bit more in depth on this right now. Okay, so 2% risk management, and from the 2% risk management, what you're going to do is, let's just say that you're starting out with $500. Right, so you're starting out with $500, and you want to get into a trade. Now, we follow a 2% risk, right? From that 2% risk, what you're doing, what that means is you're risking 2% of your account. Like, meaning, if I lose, I'm going to lose 2% of my account. So what is 2% of my account? Based upon a $500 account, that is $10. So you would lose $10 if you were to lose on that trade just now. Okay, so you would lose $10. Now, how would you know, like, what point exactly would be able to lose $10? Well, we're going to be talking about, lot size and stuff like that, but we're also talking about stop loss. Okay, so let's just say that you're going to get into a trade, right? And you know what your stop loss is. Okay, let's say that your stop loss was stop loss is 40. Okay, let's say the stop loss is 40. Okay, but you want to know, okay, what lot size am I going to get into? Okay, the easiest way to be able to do this, there's an app that you can be able to download. Okay, that I believe is very, very simple to be able to break it down for you. So let's go ahead and check out this app real quick. So the app that we're going to talk about that I want you to download is My FX Book. All right, so go ahead and download that real quick. Pause the video if you want to. Download My FX Book so we can make this as simple as possible for you. All right, so click where it says My FX Book. All right. You can be able to find out about news on here that's popping up, and you have different calculators. I think it's really cool. Okay. So from here, like I said, you have news that pops up and stuff like that. You'll be able to know about today, tomorrow, and throughout the week. Click where it has the top left over here. Click where it says calculators. Okay. From calculators, you're going to go to position size, right? And then you see where it says risk fixed amount, right? If you're risking a specific amount, let's just say we're going to go to where it says risk by percent. Let's say that you put in your balance. Let's say that your balance, again, is 500, right? And your risk is 2%, and your stop loss is 40. Done? And then you're going to click where it says calculate. You scroll down, and then you see where it says standard lots. So that's going to be your lot size, right? Remember how we said, 2% of 500 is $10. You see where it says pip value per lot, how it says 10. So it calculates, if you get in at a 0.03 lot size and it goes in the wrong direction, 40 pips, you're only going to lose that $10. Beautiful. All right. Very, 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 very simple. Let's say that you have a different amount. Let's say you have 2,500 in your account. Same exact stop loss. All right. Calculate. It's going to say, hey, listen, to lose only $10 of your account. No. 2% risk management. More. Risk by percent. Boom. Oh, actually, it's the portion where it says amount at risk. Actually, you see where it says 50 USD. That's actually where it's at. All right. So amount at risk is only $50. 2% of 2,500 is $50. The amount at risk is $50. You see where it says standard lots. So that person will go ahead and get in at a 0.12 lot size. Okay. Very, very, very simple. All right. So that is that when it comes to risk management for one specific trade. But here's the thing. Again, what I would highly suggest is the fact that when it comes to this risk management, you do 2% per trade. Okay, 2% per trade. That's number one. No more than 2 trades per pair at the same time. Right? So no more than 2 trades per pair at the same time. And then from there, no more than 10% in total risk at any point in time. So that means 5 trades running at the same time. Okay? So let's go ahead and break that down real quick. So 2% risk per trade. So let's just say that you got in on a GBPJPY trade at 2%. Okay, that's one trade that you got in on. Okay, no more than 2 trades running at the same time. So you can, if you feel confident about this specific trade, cool. You can be able to run another one at that price. Okay, I mean, you can be able to run just one more, but that's the most. You can't do anything else on GBPJPY. That's the most. Okay, so that's that. Now, So the next thing is no more than 2 running on the same time, same thing, and then no more than 5 trades running, period. No more than 5 trades running, period. So you already have 2 on GBP/JPY. You feel comfortable, let's just say, for another trade going for USD JPY as well, right? You feel confident, but not that confident on this one, so you're only going to do 1, right? But you also feel confident about EUR USD. You feel actually really confident about EUR USD. So you get in on 1 and you also get in on another, right? So again, no more than 2% risk based upon each trade that you do, period. Don't try to couple anything. Don't try to overthink things. No more than 2% per trade, no more than 10% in total running all at once, okay? Now, this is another thing that you can be able to do. Let's just say that your USD trade right here is in crazy profit. You're doing well. You move your stop loss so that you can be able to lock in your profits. And USD JPY, no matter what happens, you'll make a profit from that. With that being the case, this is not risking your account anymore. Your 2% is open. Being the fact that your 2% is open, you have another trade that you can really get into. Does that make sense? This one can still be running, but you still have you have 8% taken, but you still have another 2% that you can be able to use. Being the fact that this one right here is open, if that makes sense. Okay. If you have any questions, just let me know. I think this was a great session. We talked about pips, we talked about lots, how to calculate them, we talked about risk management, and I think that's literally all you need. Now we can be able to go into the course, right? We'll probably add in a couple other videos. Understand that this right here, I promise you, is just a placeholder, just for now. I just wanted to make sure that you have something on here when it comes to the basics of Forex, but I do plan to make it a splash later on. Okay, so really appreciate your time, guys. Pay attention, stay excited, never stop learning. Let's become metrics for now together. Let's get it.